Hey everybody, it's Jack and welcome back to another portfolio update video. It is that time of the week again where I go over the stock market in the week that was, all the stocks that I purchased last week, and what stocks I'm looking to add to my account over the coming week. So we're going to get into all of that. But first, if you're new to the channel and wondering exactly what it is that I'm doing, I'm currently undergoing a WealthSimple challenge where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing. So I invest around $200 each and every week into the stock market on a consistent and reliable basis, really just dollar cost averaging into some of my favorite Canadian stocks, as well as some ETFs that give me US exposure, with the end goal really just being to one day being able to retire off of my investments, and hopefully the sooner the better. So first, touching on the stock market last week, it was a pretty decent week for both the US and Canadian stock market. Both saw weeks that were in the green. Both were up around 0.5% in the entirety of the week. So definitely overall did pretty well for the stock market. Maybe some people did better than others. I'm looking at you, anyone who holds the meme or Reddit stocks, the GameStops or the AMC, as they saw killer weeks and you maybe saw an over 100% week. So let us know down below in the comments if you're one of those people holding AMC or GameStop. Kudos to you. I personally choose not to hold those meme stocks in my portfolio as I see them as a little bit risky, and just as much as they can go up, I think they can also come down even further. So to each their own. So getting right into my account status and how my portfolio performed last week. We had a really solid week. My account currently sits at $5,812.86. So definitely chipping away and getting up there. And we are actually up 0.5% on Friday, $29.34. And for the actual week, we were up 0.77%. So really solid week overall. That was $44.34 in the green. And if you saw last week's video, you'd know that my all-time performance last week was sitting around break even. So now all-time we're up 0.76% or $43.86. And as you'll see, I'm really starting to shift towards more dividend stocks within my portfolio, dividend growth stocks specifically, to really help accumulate that passive income each and every month and really start to get that snowball to pile up where you can start to live off of those dividends in the future. So now diving into my portfolio spreadsheet where I track all of my stock positions and my passive income from my dividends, which as always, you can download this template down below in the description of this video for totally free. Let's first kick it off by going through my portfolio and talking about the stocks that I added to last week, which stocks I bought. So if you watched last week's video, you'd know that my main kind of goal for the week was to add to my ETF positions and gain more exposure to the US stock market, which I'd get through my ETFs. The first one I added to was my QQC.F. This is a NASDAQ 100 ETF, which gives you great exposure to the big tech stocks such as Apple, Google, Microsoft, and Amazon. So really, these are companies that I think are just going to continue to grow and dominate the space over the next few years. So I definitely want to get some exposure to that. So I bought one share of QQC.F as it does trade above $100, so it's quite an expensive stock. So I now have 4 shares and it makes up 7.8% of my portfolio as it has averaged around 20% returns over the past 5 to 10 years. So really solid returns from this ETF. The second ETF that I added to was a little bit on the safer side. It's the Vanguard S&P 500 ETF, VFV. This is one that tracks the top 500 companies in the US. So this ETF also gives you some exposure to the same stocks in the NASDAQ 100 ETF, but it has 400 more stocks within the ETF, which really just helps to give more diversification and exposure to the US stock market while still being backboned by those strong growth companies in the big tech space. So this is one that averages around a 10% return over its history. So this is another really solid, just kind of slow growth, but chipping away by adding into this position, you're going to just consistently see that appreciation in your portfolio. So I now have 3 shares of VFV. And again, it trades around $90 a share. So just between those two purchases, that made up the majority of my buying power last week, around $200. But I did chip away at a few more dividend positions. I added one more share of Manulife Financial, ticker symbol MFC, as this is one of my newer dividend stock positions that still is kind of lower in weighting in my portfolio, and I'm also down on it. So I wanted to continue to dollar cost average into this one, as it's a great dividend growth stock, which has been continuously growing its dividend at a really steady rate over the past decade or so. So I bought one share of Manulife Financial on a slight dip at around $25, and I currently have 10 shares, and it makes up 4.4% of my portfolio. And then again, I added one share to Smart Centers Real Estate Investment Trust, ticker symbol SRU.UN. This is a real estate investment trust that pays a monthly dividend. So this is one that's going to be continuously giving me cash flow every single month. and paying into my account, which I can then use to buy more dividend shares and really start to get that snowball going on a monthly basis. So this is one that I really like. I'm currently up 8% on my Smart Centers position as a whole, and I have 9 shares, and it makes up 4.5% of my portfolio. And I'm just going to continuously add to this position over time and really build that monthly passive income to backbone my account. A couple notable mentions in the account right now is Algonquin Power and Utilities. This is one that I'm currently down around 7.5%. This is going to be one that I focus on in the coming week, as I really want to continue to dollar cost average into Algonquin Power, as it currently has a PE ratio of around 10, which is historically low for Algonquin Power. So I want to continuously add to this position and hopefully bring my average cost basis down below $20 per share, as I am currently at $20.35 as my average cost. I should also point out that currently my 5 kind of higher growth, higher risk plays that are deemed penny stocks are currently all down. So ironically, my high growth stocks again are not doing too well. And for this reason, I'm really just focusing on dollar cost averaging into my really solid dividend stocks and dividend growth stocks specifically, because I kind of have already dollar cost averaged into multiple of my higher growth plays. So I'm currently just going to let them play out, as again, this is the reason I buy into stocks that I believe in for kind of a decade into the future or more. So really long-term investment horizons. So for that reason, I'm really not worried about all 5 of these positions currently being down and a few of them being down quite substantially. So now if we look at my dividend tracking and how my passive income is growing as I add more and more dividend stocks to my portfolio, we can see that currently my annual dividends is sitting at above $150. So we just broke that $150 mark, as it sits at $153.89, up from the previous week as it was at $149 last week. However, this is not a huge jump. It only went up $4 or $5, as our main focus last week was those ETF positions that don't have high dividend yields and don't really add much passive income. They're more kind of long-term steady growth plays. So for that reason, we don't see the monthly average or the annual average going up a whole lot. And our kind of entire portfolio dividend yield currently sits at 2.63%. So this takes into effect all the growth stocks and all those ETFs mixed with all of our dividend stocks to give you a total portfolio yield. And this is probably something I'm going to work on in the future, maybe trying to get this portfolio yield up to around 3%. And if we now look at our monthly dividend income kind of bar chart, that just helps visualize how our passive income from our dividends is going to be growing every single month by chipping away at our dividend positions, we can see that already in the first week of June, we've already collected over $6 in dividends. So it really looks like June is going to be our highest month yet for collecting dividends, as we're already pretty close to our previous all-time high of $8.94 that we saw in April. So really over time, we're going to see this bar chart just continuously grow at a really steady rate. And eventually, as that snowball begins to pick up in our passive income, it's going to start to take off and grow faster and faster as those dividends just keep reinvesting and buying more and more dividend shares, and really let the power of compound interest take over. So now looking at our portfolio breakdown chart, where we can really see the weightings of each individual stock position in my portfolio. And as we can see, Algonquin Power and Utilities, ticker symbol AQN, is our largest weighted position, sitting at 8.8% of the portfolio. And last week, by adding to QQC.F, our NASDAQ 100 ETF, we are really able to bring up its weighting in the portfolio, and it currently now sits at 7.8%. So that's really a noticeable mention. But you can really just see that our average for our weighting of each position is kind of in that 3 to 5% range. That's kind of the sweet spot for the majority of our stock positions to really get that diversification across sectors and across just individual stocks, which leads perfectly into our next chart, which is sector allocation, where we can see the breakdown across sectors within our portfolio and the weightings that they take up. A sector that I want to work on building up in weighting in my portfolio over the coming months is really my consumer goods or consumer staples sector, which you can see in the red only makes up 3.5% of my portfolio. This is a sector that is commonly known in both Canada and the US to have some really solid dividend growth stocks. So in Canada, this would be kind of like Loblaw or Metro. Another one I've been seeing recently and doing some research on is Alimentation Couche-Tard. This is another really great dividend growth stock. And there's also some in the US that are just staples in the space, such as your Coca-Cola or Pepsi, or potentially your Procter & Gamble or Kroger. So let me know down below what's your favorite consumer staples dividend stock, as I definitely want to add a new position to my account. But all of that really leads perfectly into my weekly watch list. For growth stocks on the watch list, the first one is adding to one of the smaller ETF positions in my account, which is Canadian Tech ETF, XIT. This is one that I want to continue to get exposure to, as the largest stock position in this ETF is Shopify. Shopify is a great Canadian tech stock that I want to have in my portfolio, but I don't want to be spending thousands of dollars on shares for. So XIT is a great option for me to get exposure to Shopify. So I want to add one more share of XIT over the following week. And then I also have in the growth sector, Algonquin Power, AQN. This is one that I have in the growth section because it has been seeing really great share price growth over the past 5 to 10 years. And I really think that at the current prices, it's a great buy, not only for the dividend, but also seeing that growth in the share price. So I'm going to plan to add 3 below $19. Hopefully I can get that around $18.50, as I think that is a great spot. And then in my dividend positions, I want to add to Smart Centers, again, just to build up that monthly passive income, because this is a monthly dividend stock. So one more share of Smart Centers over the coming week. And then again, Manulife Financial, ticker symbol MFC. I want to add one more, as this is just a great dividend growth stock that I think is really fairly priced at the current share price, as it currently has a PE ratio under 10. And then the final stock that I want to add over the coming week is one share of TD Bank. TD Bank is currently the only Canadian bank stock that I hold within my portfolio. I'm going to be going over TD Bank later on this week in a full video, but just quickly, the key bullets that I think about TD Bank is it's currently trading around a PE ratio of between 11 and 12, which is historically actually low for TD Bank. It's actually trading under its 5-year average PE ratio. So I see TD Bank currently being at a discount today, even though it is currently trading near all-time highs. It also has the lowest PE ratio of all the big Canadian banks, and it's been growing its dividend at a higher rate than all the other Canadian banks over the past 5 to 10 years. These are just some quick reasons why I think TD Bank is still a great buy even at today's prices. So I'm going to plan to add one, hopefully below $87.50. So there you have my weekly watch list for the week ahead. I'm really going to be focusing on my core dividend positions that have lower PE ratios at their current evaluations, as the stock market in general is trading at pretty high average PE ratios, both across the Canadian and US stock markets. So I'm really pinpointing the stocks and positions in my portfolio that are still trading at really good evaluations and fair evaluations today, and really focusing on adding to those positions that also grow their dividends each and every year at really reliable rates, so that I can just build that passive income snowball even faster than normal. So that's kind of my focus for the week ahead. Let me know down below in the comments what stocks you're focusing on picking up in your own portfolios over the coming week. Definitely curious to see what you guys are all adding. But as always, I hope you guys enjoyed this video. If you did, smash that like button and subscribe to the channel. Tons more content coming over the few weeks. So I'll see you in the next one.